Good afternoon, students. Good afternoon, students.
Good afternoon, ma'am.
There is a Franklin,
Yes,
Aisha.
Yes, ma'am.
I'm audible.
yes,
Yes,
yes.
ma'am.
Now we are going to the next block, that is a final accounts. In this is a preparation of the profit and loss account. So every organization they need the final accounts. That is a prime motto. Means every whatever the business they starts with, it is a many every business they need the final account. Means how much they profit in a 1 year. Normally they in 1 year they will want to know the what is the better result, what is the business position that is in the financial. So comparing with the previous year and the present year, they will make out that is in the last year what was the profit and in the present what is the profit. So to know that, they will prepare the profit and loss account. That what is the profit and loss account? First, whatever the day-to-day expenditure that is in the journals, they'll write. And from the journals, they will be posting into the ledger and from the subsidiary books. So whatever the total they'll get in the subsidiary books, that will be posted in the profit and loss account. So that is a main thing for preparing the profit and loss. Means each and the purchases. What is the profit? Whether the previous year, what the purchases we got, we have lost, means we got the profit or losses. So by the books of the purchase books, they will be knowing the profit. And the sales means how much the sales they did. Means from the subsidiary books, they will be come to know. So that everything will be kept into the profit and that is the trading account. Then profit and loss account. The third one is the balance sheet. So today we are going to read about the profit. So here that is normally in this to know the better position of the organization, they will make the financial result. They want to know. So the first one is the higher profitability. Profitability means whatever the financial performance, whatever they have achieved, that is in the measures in the terms of overall earnings. That is during the financial year. So whatever the profit they got during the financial year, they want to know. And then what is the financial position? So these are the two they'll be saying when they want to prepare the profit and loss account. So financial position. What is the financial position? Means in the present year, what is the assets they are getting? What are the liabilities? Assets means that is the debt property. Liability means that what are the debts that all comes of the business. So last year, what were the financial position? What is the present financial position? So to know this, they have to prepare the Proforma that is in the financial statement is called the trading account and the profit and loss account. Is it? So in this, then whatever the accounts they get along with the balance sheet means if it is tallied in the balance sheet, then you are posted everything equally in the financial, that is in the final accounts. So yeah, the trading and the profit and loss account, where it is also make the one of the pro forma, that is a balance sheet for the two basic financial statements of the business. In this, they will also prepare the another statement, that is manufacturing account. So they will not manufacturing account to know that whatever the cost of goods sold, to find out the cost of goods, that is whatever it is purchased or it is produced, that is during the financial year. To know the cost of the goods and how much they have produced, what are the costs they have sold. So for that, they will be prepared the manufacturing account. And along with this, there also preparation for the process, that is a preparation of final accounts. Only cost of goods only is not the thing for to know the financial position of the company. Even to know the financial position of the company, they have to prepare the final accounts. It's clear, ma? Yes,
Yes, yes, ma'am.
Yes,
it's
ma'am.
clear. Any doubt?
No, no doubts.
No,
So
ma'am.
next we go to the trading account. So in the financial year, whatever the business you are doing, whatever the performance of the business, that will be judged in the terms of profit or loss. That's why we will be making the trading account. In the trading account, when you are making that, there are the two levels. One is a gross profit, the other one is a net profit. So gross profit or the gross loss, that is a level. And the next one is a net profit at the net loss level. So these are prepared. When you are getting the gross profit or gross level, that will be prepared in the trading account. That will come in the trading account. Net profit and net loss will be seeing in the profit and loss account. It should be prepared. We'll go to next. So symbolically, we know that cost, that is a GP. GP is nothing but it is a gross profit. Gross profit, it is always equal to net sales minus cost of goods sold. So whatever the net sales, suppose if you have the net sales is the 1 lakh rupees. From that 1 lakh rupees, if you are selling the 80,000, then what will be the GP? The gross profit you got? 20,000. That is a GP. And the next is if you are seeing that net gross loss. So that is a net sales minus gross profit. So here, if it is a debit side is more than the credit side, then you'll be getting the gross loss. Are you getting my point? If you are getting the gross profit, credit side is more than the debit side. Means on your right side, whatever the total you are getting, see here, this will be in the credit side, this will be the debit side. If the credit side is more than the debit side, we'll be getting the profit. If it is a debit side is more than the credit side, then we'll get the gross loss. Clear?
Yes, ma'am.
Is understood? Whereas net sales is equals to total sales. That may be the cash or in the credit. So net sales, when they are expressing, that may be if the customers are bought goods in the cash, or they may be repaying afterwards. But in this present year, whatever it is done in credit sales, that should be written in the profit, that is in the trading account. That whatever the credit sales you are, so means in this year, you have sold your goods on the credit. So that should be written in that same year. Yes, साल में pay कर दिए, next month, next year, you are getting the amount, means that you cannot put in the next year. So the sales, whatever the sales is done in this current year, that should be written in the same year, whether it may be the cash, whether it means in the credit. Net sales is equals to total sales minus sales return. Okay. Then cost of goods sold, COGS means cost of goods sold, is equals to opening stock plus total purchases minus purchase returns plus direct expenses minus cost of closing stock. This formula you have to remember. Cost of goods sold is equal to. This one you will be getting for 4 marks. That short question. They will give, they'll ask the opening stock, closing stock, and the purchase return, direct expenses, closing stock, they'll be asking you, and find out the cost of goods sold. Even they may give the total sales and sales return, then they may ask to find out the net sales. This is a formula, it is there in your book. I'm not getting the voice from your side. Yes, Aisha, Franklin, Pavani.
Yes, ma'am.
I'm
Yes,
not getting
ma'am.
your voice. You are not interactive with me.
We are listening to you, ma'am.
Listening, but I must know whether you are
We
understood
will
or not.
we will respond now.
Understood, ma'am.
If you respond, then only it will be. Only one side. I'm only telling I'm not getting the response from your side. Okay.
Okay.
Now
Ma'am.
we'll see the what is the pro forma of trading account. Here, trading account, opening stock means this is the opening stock. It may be the closing stock of last year. Last year closing will be the present year opening stock. Okay. And this is the purchases. So means total purchases you have paid. And from that purchases, some of the goods were returned. You have purchased because of the damage or it is over. For that, you may return it. So total purchases, if it is a 10,000 rupees, from that you have minus returned 800. So you will be writing 9,500 is your total sales. Okay. And then to carriage, freight on purchases. Means here the carriage or it may be freight on purchases. Freight means
The transport charges.
here carriage is given, freight charges is given. What is the differences between these two?
I think both are same.
How can we, the both are same? Transportation you are telling. But
Yeah.
specific answer should be there, no? Why I can put the carriage and oblique freight on purchases.
Okay.
Here the goods which are brought to the airline, freight charges. So transportation, it is road or it may be the flight charges. Is it
Okay.
clear? That
Yeah,
also
got
you
it.
will be writing. That is a freight on purchases. And wages, which is a wages where you are paying for sorry, wages means the workers who are working in your factory, for them you are paying the wages. And tell me what is the difference between the wages and salaries. So in the trading account, I'm writing the wages. Let me go to the profit and loss account where I'll be writing the salaries. So what is the difference between these two?
Salary is something which is fixed, which we get on a monthly basis,
Yes.
and wages are like on a contractual one.
Mm. It may be the daily wages. It
Yeah,
may be the
daily
weekly
wages, weekly
wages.
wages. Yeah.
So that is we can make it. So here we are talking about the trading. Trading means the people, they may not be fixed. They may be brought for the contractual. So for whatever the contract work, they may getting the people and they are paying the wages. Is it clear? And for that, add outstanding wages. Add outstanding wages means what? The wages which they have to pay. Still, you have to pay for the workers. That is the outstanding. Outstanding means still you have to pay the amount for the workers. Suppose if today you are has to pay the 600 rupees. But you are not able to pay the 600 rupees. Tomorrow, along with your tomorrow amount, you will be adding the 600. That is outstanding. Still, you have to pay it. Okay. Next is fuel and power. Fuel and power means where it is used in the trading. Custom duties. Custom duties means what?
Custom duties means normally when the goods shipped from one country to other country,
Yes.
there's a cost which is in, like, the charges. What?
Yes. That is custom duties, excise duties, custom duty. It may be the shipping side also. We can have the custom duties. Even in aerodrome also, you have the custom duties. Is it clear? And next is a octrio. It is also, that is warehouses. They pay the amount. And where you are storing your things, somewhere, if you're very far place, means you will be storing your goods at some place. For that also, you have to pay the amount. Excess duties, royalty. What is the meaning of royalty? Royalty means what?
Not sure on that.
Royalty means, here, suppose I'm writing some of the books. So my book is very much effect, and there is a good flow of the selling in the market. So once when I'm writing, till there is a demand for my book, they will be paying me royalty. Got my point? There is a demand for a product. Suppose if you have prepared any machine, you have sold it, then also they will be paying the royalty because you have prepared one machine. With that machine, they are making the work. So they will be paying the royalty every year. That also they have to pay right in the trading account. Did you get my point?
Yes.
Then, here next is a buy sales. Sales means how much a sales you have made. If there is any defective in your sales, the customer may return you. That is a sales return. Then closing stock means whatever the opening stock, whatever you sold, from that, whatever the left out stock, that will be writing on your credits. So now, credit side will be more than the debit side. Then you will be writing the gross. No, yes. Credit side, debit side is more than the credit side. If the debit side is more amount, in the credit side you have the less amount, then you will be writing the gross loss. Only when there is exist any balance or no gross profit. And next is a credit side is more than the debit side. You will be getting the profit. So when whatever it is a profit or the losses, that will be transferred to the ship, then will be carried down to the net profit, that is in the profit and loss account. See here, to gross profit carried down to P&L account. That is a balancing figure. Is it clear?
Yes.
Now I'll show one question. It means such a type of a questions you will get in your exam. Mr. Anand provides you the following information relating to sole proprietary concern. For the accounting year ending, that is the 31st March 2008, particular amounts they have given. Opening stock, they have given 90,000. Purchases, they have given 3,65,000. Direct expenses, indirect expenses, sales, indirect income, closing stock, return inwards, return outwards. Return inwards will be writing in the trading account. Return outward. Sorry, return inward. Return inward means is the when you are purchasing. When you are purchasing means from outside. If I want purchasing from you, Is it? I'm purchasing from you. So then whatever I'm returning you, that will be written inward, outward, that is a purchases and a sales. Here, a written outward from the purchases, you will be minus. See here, outward means from the outside you are purchasing. If it has any damage, you will be returning outward. If you are selling, if any damage means the goods again coming you, that is inward. What happened, Aisha, Pavani? Both are there. Only Nelson is telling me answers. I think you both are quite busy.
Yes.
You are both are quite busy or just
No,
sleeping?
no, ma'am, listening.
Are you getting here? Written inward, written outward. Written outward always should be minus from the purchases. Written inward, that should be minus from the sales. Okay. So here the question is given, and here they ask you are required to calculate cost of goods sold. Then gross profit. Just now symbolical, we have made the symbols, no? This is a formula. Are you getting this one? See here, cost of goods sold. What is the formula? Cost of goods sold. Cost of goods sold. See.
Opening stock.
Yes.
Plus purchase.
Yes. Minus
return outwards.
Purchase return.
Purchase return is nothing but in the
Purchase,
question.
Return
Purchase
outward.
return is a outward plus direct expenses minus closing stock.
Closing stock.
Cost of goods sold is equals to opening stock plus purchases minus return inward plus direct expenses minus closing stock. Here we have the opening stock 90,000. We have the purchases 3,65,000. Return outward is a 5,000. Plus direct expenses here we have 25,000 and the closing stock it is a 41,000. Total cost of goods we got 4,34,000. This type of questions you'll get for short. Okay. Next, what is a gross profit? Gross profit, it is a whatever it is a sales. Gross profit I have given here. See here. Net sales minus cost of goods sold. Gross profit is equals to sales. What is the sales amount? 5,31,000. But here, there was a return is also given. So sales minus a return minus cost of goods sold. So GP is equals to sales minus cost of goods sold. So your sales direct amount is not given. Even there is a return is given. So that we have to find out the first what is the total sales. From the total sales, you have to minus the cost of goods sold. What is the cost of goods sold? It is given. Here it is a 4,34,000. So gross profit, it is a 90,000. Is it?
Yes.
So here 4,34,000 minus 4 lakhs. Minus cost of goods sold. So from this, when you are taking, we got the 90,000 is the gross profit. Are you clear?
Yes.
Yes.
Now, we'll see how you'll be preparing the trading account. So these are the things you have to remember, ma. Here, prepare the trading account. So final account will not ask you. So little bit also they may ask. Means a short part, it is a trading account. Ramji for the year 31st March 2018. In that, they have given the cash sales is given, credit sales also given, stock of goods on 1st April, stock of goods on 31st March. What is the difference between these two? Always the financial year, that is the 1st April to 31st March. So 1st April, they have given that is the opening stock. And the closing stock is the 31st March. Is it clear? 1 year statement that is. And cash purchases is given, credit purchases given, means the same as the sales, cash sales and the credit sales. Purchases also, cash purchases and the credit purchases also given. And written inward, written outward. And goods withdrawn from by Mr. Ramji for personal use. When it is a personal goods, personal use means that is a drawings. Whatever it is a personal, that is a drawings. But here we'll not writing the drawings, but the same thing you have to draw it, right? Goods distributed as a free samples during the year, that is a 8,500. Carriage inward, 15,500, and carriage outward, it is a 8,500. See here, opening stock, what is the opening stock we have? Here it is a 5 lakhs. And the closing stock, we have to write here, it is a 9 lakhs. That is a by closing stock, it is a 9 lakhs. And the next is a cash purchases. Sales is given cash sales and the credit sales. By sales, it is always on a credit side. By sales, that is a cash, it is a 10 lakhs. Credit is a 25 lakhs. So when you total from this, total you got 35 lakhs, adding the cash and the credit. So total sales, how much? 35 lakhs. Here we have our return. Returns here there now. Where is the returns?
Here, ma'am, written out.
Written out. Inward. That is a 45,000. From the 35 lakhs minus 45,000, you will get the 34 lakhs 55,000 is a total sales. Is it? Then purchases given. Purchases also cash purchases and credit purchases. When we add these two, we are getting the 25 lakhs. 22 lakhs. So you little bit you are getting confusion. I'll put the so from this total we got, and from this purchase return. Purchase return means that is outward 35,000. Okay, and goods under personal use 22,000. They have withdrawn for the personal, and some of the goods they have distributed as a sample. So from the 22 lakhs, you have to minus how much? 65,000. When we 65,000, when we 65,500, when we minus these all from the 22 lakhs, the total purchases is 21 lakhs 34,500. Okay. Then carriage inward. Carriage inward means the transportation, whatever we are getting the raw material from the outside. The transportation is used to get the raw material inside, that is inward in your factory. That will be written in the trading account. Is it clear? And here, one more it is also there, carriage outward. That will be written in the profit and loss account. Outward, inward means you are getting the raw material from outside, for that you are using the transportation. And outward means after the complete production of your goods, you are sending your goods with the transportation, means outward. So that outward will not come in this trading account. And here, See here, when you add 34,55,000 plus 9 lakhs, you are getting the 43,55,000. So here 43,55,000, it is on a credit side. So here we are getting the less amount on a debit side. So how much should be added more means this is a gross profit 17,05,000. It is a gross profit carried down to profit and loss account. It is a balancing figure. It should be tally. Though tally hona. यहाँ पे which side you are getting the more amount, which side you are getting less amount, that should be substituted. But whatever the difference amount should be right on that side. Nelson, are you getting my point, ma?
Yes, yes.
So if you are getting the less amount on the credit side, what is the difference amount? That amount should be written as a gross loss. But here on the credit side, you are getting the more amount than the debit side. So what is the difference amount you are getting? That is a 17,05,000. This is a gross profit.
Okay.
Understood?
Yeah.
Yes, ma'am.
Next. Now, just now I told no manufacturing account. Here, manufacturing account, it is only products are manufactured before they are selling to the in the market before going. So manufacturing done in the factory. So before sending to the market. So that is a separate account. You have to prepare that it is a manufacturing account. In this, the cost of manufacture of goods and the product before the preparation of trading account. That too we have to look after. So in the manufacturing account, only the certain goods manufactured only you have to write. Accounting period. During that year, whatever the goods are used for the manufacture. And next is the trading account. In this trading account, whatever the gross profit or loss by selling the manufacturing. Means here you made all the manufacturing goods. From there, you have sending to the trading market. There, you want to know the whatever the profit and whatever the losses for selling the manufacturing goods during the accounting period. The next is a profit and loss account. It is prepared to ascertain the over profit and losses, whatever the profit or losses you are suffering from the manufacturing concern. If you are getting loss means there is a defect in the manufacturing department. Is it clear? So here, if you are getting the profit, then you can give the appreciation for the manufacturing department. Is it clear?
Yes, ma'am.
Yes.
Next is a manufacturing account. In the manufacturing account also, work in progress. Work in progress means whatever the material you are using, whatever the raw material, work in progress. Still it is a construction. So that is opening. You will be writing on a debit side. And raw material, that is the opening raw material. For that, you will be adding the purchases of raw material and minus the raw closing raw material and that is carriage of raw material means getting raw material from the outside. That is carriage on purchases of raw material and direct wages where you are productive or the direct wages where you are paying to the labors. And next is the factory overheads. Factory overhead means where you are paying the salaries to the manager and fuel means these are the things comes under this mark. Factory overheads means these are the things in the factory. These are the things where you will be paying the amount. Salary for the work manager, the head, and the power and fuel which is used for the manufacturing and repairs of the plant and machinery, depreciation on factory building, plant, loose tools. If you are paying any rent for your factory, that will be written. And factory lighting is for the production, whatever the light or you are using, that will be written in the manufacturing account. Factory rates and taxes, factory insurance, that all comes under the factory overheads. So if you find in your question like power, fuel, salary to the work manager, factory rent, factory lighting. Means if they are not mentioning you prepare the manufacturing account, means you have to supposed to prepare the manufacturing account. In the question itself, if you're finding all the factory. Like uh, if you're finding any scrap in your question or goods manufactured during the year with transferring, means these are the things when you are finding the raw material that is only concerned with the manufacturing account. Are you getting my point?
Yes, ma'am.
Yes, ma'am.
Next, then proforma of profit and loss account. So here, profit and loss account in the in the previous question, that is in the trading account, where you have seen the gross profit brought down. Closing you have not carried down. Gross profit you are made, you have seen, no? In the trading account. Here, we see gross profit carried down. You have seen, no? This will be brought down. See here. Gross profit, if any, brought down. Gross profit, it is whatever you are getting on a debit side, that will be written on a credit side. Whatever the loss you are getting, that you will be writing on a debit side. Are you getting?
Yes, ma'am.
Yes, ma'am.
Here, you are getting loss now. Your credit side, that should be written on a debit side. Cross into, this will be written in this side. Wow, chocolate. So here gross loss to salaries, rent, lighting, electricity, commission, telephone charges. Means here, after the manufacturing, you will be having an office. Means there you will be maintaining the salaries, you will be maintaining the one office. For that, you will be paying the rent, and where you are appointing some of the workers, you are paying the salaries, and you are making the agent. For the agents, you are paying the commission, and you will be having the telephone in your office where you are paying the telephone charges, stationery, rates and taxes, postage, courier charges. These are all the things when you establish one of the branch. Factory is different. Manufacturing, where it is done all the raw material. Here it is a pro forma for the profit and loss account. There from there, again, you will be making all the different office, that like branch. For that, whatever the expenses you will be making using this all. And bad debts. Bad debts means what? You know bad debts?
Bad debts is something which which
May come,
we
may not
normally
come.
we cannot expect the money coming.
Yes. And audit fee, that is in your office, you will be having the audit. For that, you will be paying the fees. And
Yes.
some of the departments, some of the business people, they'll give the donation for the charity. And some of the offices, that losses on the due to the theft or the fire.
Yes.
So that all comes under the profit and loss account. And now you see, from the following trial balance, it's given the trial balance. Now Jyoti, trader, prepare a trading line profit and loss account for the year. So in the stock, the 1st April, they have the stock, the 1st April, that this is the amount they got. I think the amount, just you see in your textbook, ma, you have your textbook. Is there any textbook with you?
Yeah, I have it.
Just you see. I have written some of them. Read that Navajyoti. Prepare from the following. You have to prepare the trading on. Are you finding?
I'm unable to find it. Give me a minute.
I think it is a 5,000. Yes. That is a 5,000. That is the opening stock. Still you didn't get?
Yeah, opening stock, 1st of April 2016, 5,000.
Yes.
Purchase
5,000.
of sale, 50,000.
Yes.
Below that, yeah.
So this
I
is a
got it.
question. Now we'll see opening stock. It is given the 5,000. It is right.
Yeah.
And in this purchases is 50,000. Return is a 2,000. Outer column it is a 48,000. Carriage inward it is a 2,500. And your sales you have 75,000. Return is a 4,000. It is outer column it is a 71,000. Closing stock it is given 14,000. Here hiding this one. Just you hide this one.
Yeah, got it. 29,500.
How? See here, this is a 85,000 you got the total. What is the difference amount where you are getting? That is a 29,500 is a gross profit. Credit side is more than the debit side.
Debit side.
And this amount, this year, just now, I think you got some confusion. Now it is clear. It is carried down. So same thing you're not writing on a debit side. When it is a credit side, just you have to brought down it is on a credit side. When you are getting on the debit side, you have to write on the credit side. Are you getting?
Can you please repeat that once again?
Yeah, 29,500, no? You got the gross profit. This amount should be brought down. This is this complete profit and loss account. This one is a trading account. This one is a profit and loss account. This is complete. That is a manufacturing department. This is one complete. It is an office. So in the manufacturing, that is of purchases, sales, and carriage inward. Then when we making this one, you got the profit. That is a gross profit. This 29,000 you have to bring down.
Okay.
In the profit and loss account, you will be having the two things. One is the gross profit and the net profit. So this gross profit, we have to brought down to the next one, that is the 29,500. And here we have the sales, salaries is a 4,800, rent is a 3,000, stationery is a 2,000, general expenses 2,000, discount it is given 500, and insurance is a 12,000, 1,250, interest. So these all are debit. Whatever you are receiving, rent received, interest received, discount received, that all are credit. You have to write on the credit side. Here, see, rent you have, means you are paying. And even the company is getting the rent. They are receiving from outside. Discount is also allowed is there. Allowed will be on a debit side. Discount received will be on a credit side. Interest also you are getting. Even you are getting the interest received. These two are different. Interest where you are writing, that is allowed. Interest, you are paying the interest. You are allowing the discount. You are giving to other people. Here, you are also receiving the discount. It may be raw material. When you are buying the raw material, that raw material businessman, he may give the discount to you, where you are receiving the discount. Is it?
Yes.
And so here when you total this all, you are getting the 37,300. So on a credit side, again, your amount is more than the debit side. So that amount, the difference amount is the 21,250. That is a net profit. That the net profit will be transferred to the balance sheet. Will be transferred to balance sheet. You are getting on this one on the credit side, no? So here in the profit and loss account, debit side and credit side. This one you know. Debit on a left side, on your left side. Credit will be on your right side. But the last you are going, it is a balance sheet. Preparation of balance sheet. So here this one is a credit and this one is a debit. Till now in the profit and loss account, on your left side it is a debit, on your right side it is a credit. No? Yes?
Yes.
But
Yes,
in the balance sheet, whatever is on your left side, that will be the credit. Whatever you will be on the right side, that is a debit. Means your liabilities are all are the, like what we say, all debts of you. Assets is your profit. Debit is your assets. Credit here, it is a debts. Yeah, bank overdraft. Bank overdraft means what? Whatever the balance above to your balance you have brought from your bank. You have to pay the 15,000, 50,000. But in your account, there is only a 10,000 rupees. Means extra 5,000 rupees you have withdraw from your bank. That you, from the bank you have overdraft you did. Still you have to pay the 5,000 to your bank. Is it? Yes.
Little confusing, but you're trying to understand.
See, you are a businessman.
Hmm.
You need to pay the 15,000 rupees for your outsiders, means your from where you purchase the amount, means purchase the raw material.
Raw material. Okay.
So you have to pay the amount.
Yes.
15,000. But in your balance, that is in your bank account, you have only 10,000 rupees. So extra 5,000 you need.
Yes.
That extra 5,000, you will be putting a letter to the bank people, that is overdraft. Only the business people only will get the bank overdraft permission from the banks. That too, who are going to do with the day-to-day transaction, business people. Every day who will do the transaction, for them only businessmen only will get the overdraft permission. So that 5,000 you have drawn from the bank. Means that is not free of cost, no, banker will give.
Yes.
Again, you have to pay it.
Exactly.
So that is your debt only, no?
Got it.
Then outstanding expenses. Outstanding expenses means in the just now I told that outstanding wages means here outstanding means still you have to pay the amount. Outstanding means still you have to pay the amount. That is debt only, no?
Yes.
Prepaid means you are
Paying
supposed
in
to
advance.
be paying in advance. That is asset for me, no?
Yes.
And yeah, sundry creditors means still who has to pay you. Pre-received income. Pre-received means still you have to. And the loan taken, borrowing, proprietor's capital, opening balance, additional capital you are introducing in your business, and the net profit. This net profit have to add. There's no, here we have no net profit. When you are getting the net profit, you have to add it. If you are getting a net loss, this side when you are getting, that should be minus. When you get the profit, you have to add it. When you are getting the loss, you have to minus it from your capital. Any doubt?
No, it's clear, ma'am.
So yeah, to your capital, you have to add if it is a profit. If it is a loss, you have to minus it. If your drawings means withdrawn, that's now I told now. If any drawings, it is given for personal use when you are using, that also you have to withdraw in the last. That is from the capital, you have to minus it. Got my point? And your current assets, that is cash in hand, cash in bank, market security, prepaid, accrued income. Accrued income means what? Accrued income means definitely it will come.
Okay.
Means suppose the government employees. So this month they have not got the salaries. The next month also they have not got salaries. But they cannot quit it. Means they know that the government will pay the salaries to them. So that will not be writing as outstanding or anything. The income, whatever the income, if you are not getting, that will be written as a accrued income.
Okay.
And bills receivable. Whatever the bills you have to get from outsiders, that is a receivable. That will be on a debit side. Investments, stock at closing stock, which also should be written. Investment, stock of loose tools, furniture, fixtures, fitting, plant and machinery. This all comes under the asset. Even goodwill, patents, trademarks. If any, it is given in the balance sheet. Just you have to go through the Proforma. Tell me, till now, whatever it is clear or not.
It is clear, ma'am.
So tomorrow, let me ask the questions. Franklin, Pavani, and Aisha.
Sure.
Okay, ma'am.
So just you go through that manufacturing account, trading account, profit and loss account. I'll be asking the questions tomorrow.
Okay, ma'am.
Okay, ma'am.
Is any doubts me? Just you can ask me.
Right now, no, nothing from me.
So just you go through your textbook and ask me doubts tomorrow.
Sure.
Okay?
Okay, ma'am.
Okay, ma'am.
Okay. Next class you have?
Yeah, we have another class after this.
Okay. What's the subject, ma?
Financial management.
Financial management.
This is only financial management.
So this is accounting and for management.
Myself. Okay. Okay, ma. See you tomorrow.
Okay, ma'am. Okay, ma'am. Bye.
Okay.